Hello, welcome back to White Swan Finance and another episode in the Mastering Order Flow series. In this video, we will be focusing on understanding highs and lows with the footprint chart so that you can start improving your trading right now. The software that you will see in this video is by ATAS, and if you want to give them a go, there is a free link in the description below. Alright, highs and lows. By the end of this video, I want you to be able to identify highs and lows that are likely strong and ones that are likely weak, in order that you may see them as a target or stop level. Now, a few things before we go any further. One thing is, if you are trading the ES or the NQ, it is better to not be looking for a high or low of day reversal during the first 30 minutes after the open, and I would still be careful after that until around an hour or so. The volatility is so high during this period, you should be careful with any trade that you take, but especially trend reversals. If you are trading oil or currencies, you don't really need to worry about the NYSE open as much, just be careful around news events. The second thing is that although I want to show you everything, it would make my videos extremely long. So in this video, we will cover the visuals of what to look for on the footprint chart. Now you can go off and start implementing what you learn, and I sincerely hope you do, but please remember I'm also using volume and other trade scanners, and importantly the bar statistics such as delta, max and min delta, and other information to my advantage also. I will of course cover all these in future videos, but I want to make that part clear before everyone runs off and starts shorting every time they see a new high, or buying whenever a low is printed on their chart, and then they wonder why they are losing. Okay, so here is an example of a high, and there are four things that I look for in the order flow. The first is a finished auction. If there is no finished auction at the high, I will be very careful if I do take a trade, and I will certainly not be at max position size. If at all, it would be a very small starter position, and I wouldn't initiate the trade until I had seen something else that gave me more confidence in the trade idea. The second thing I look for is an imbalance in the top few ticks of the candle. Usually the top 3 to 4 ticks is what I look for. It isn't as necessary to me as a finished auction is, but it adds to my criteria when filtering for trades. The third thing is something I've already mentioned in a previous video, which is declining or tapering volume. I want to see this shape, where volume is smallest at the high or the low respectively. The final factor that I then look for are large delta nodes and the volume profile of the candle. Now let's understand a little more on each of the 4 points. First, the finished auction. Of course, seeing this is easy. We have a 0 print at the high of day, but ideally I want to see a single digit number here. The lower the better, really. This shows us that out of everyone trading right now, only a very few number of contacts traded here. In this example, our finished auction, so it shows a 0 print on the bid and 16 on the ask. Depending on what I am trading, I will accept a higher number than on some contracts. For example, this is a screenshot of ES, and 16 is relatively low for ES, but it depends on a number of other factors like the current volatility, the time of day, or if there is a significant news event around that time. When looking at high of day, the lower the ask number, the better, and if we are looking at the low of day, we want to see a very low bid print next to a 0 ask print. The second thing you should already understand, as we've covered it before, which is the imbalance. I like to see an imbalance near the high or low of day within a few ticks preferably of that high or low. This shows me that there is good interest in moving the market away from that respective high or low. The third thing is I want to see declining or tapering volume. This shows failure to accept price at that level, as there is a lack of interest in trading. This is the shape I want to see at the high of day. For low of day, it's just flipped, but I will show you an example of it further in the video. It doesn't have to be perfect like this one, but this is the most ideal, when the volume nodes are very pronounced and are very small at the price extreme and get larger with each tick on the way towards the center of the candle. I usually look for this to be in the top or bottom 3 ticks of the candle. Finally, and connected to the previous point, is delta and volume profile. Now, as you know, delta is derived from volume, so the way I use it is when looking at a high or low, is there a build-up of significant delta nodes? Are they positive or negative, and what size are they in relation to the other delta nodes? There are not always significant delta nodes, but they are a useful addition to look for, especially if you want to try and gain a better entry for your position. As for volume profile, we covered it in the previous video about volume, and we've already learned the 3 most common shapes, so that's what we're going to apply to this video as well. This one here is one of the best examples of a high, which is why I used it for this explanation. Here it is on the chart. But now let's have a look at a low. Quick note, why do you think we aren't looking for a long entry just yet? Because if we look back, we have unfinished auctions at the current low of day. So let's go through our checklist after we break the low and have a close back inside our day's range so far. Do we have a finished auction? Yes, we do. Do we have an imbalance in the bottom 3 ticks? Yes, we do, but it's not a buy imbalance, which is ideally what I'm looking for. Let's check volume next. Is it tapering off towards the low? Well, it certainly looks like it. We have an angle like this here at the low of the volume profile. And as for the overall volume profile, it isn't particularly clear, and the delta nodes also don't have a significant cluster either. Let's have another look at these 2 candles here and why we wouldn't have looked to trade them. First, our criteria is for a finished auction, which isn't met. Yes, we have an imbalance in both the candles near the low, and in the first we have volume tapering, but if there is no finished auction, especially upon the extreme high or low of day, I really wouldn't recommend taking a trade. Better to wait for price to retrace and then aim to take a short with your profit order at the finished auctions. So how can we trade these directly? Well, there are 2 ways. As always, we can either market order in or we can limit order in. There are benefits and drawbacks on both. By marketing in, we don't miss an opportunity when the setup presents itself, but we will have wider stops overall. By using a limit order, say by placing our order at the high volume or delta nodes, we get a far better entry. Our risk will be less, however we don't always get our limit taken. Therefore, just because it's safer, it doesn't necessarily mean you are capitalizing on the opportunity presented. Ultimately, for retail traders, there are a lot of factors that can affect you. For example, many will tell you never add to a losing position or only enter once, but entering once, in my opinion, is not necessarily sound advice. You just need to have a clear and structured trade plan. Let me just explain that in another way. Let's say a fund has done their due diligence and analysis, and they think that stock A should be valued at $150 per share. Right now, it is at 100 per share, so they start creating a position. A while later, their analysis is still the same, but the price has dropped to $50. Do you think they don't add to their so-say losing position? Of course they do. It's an even better deal for them, because of course they're going to purchase more. Their target is still 150. So back to our order flow example. We believe this is the top, so we take a starting position upon the close of this candle. We have a stop above the high, as that would violate our trade idea. Then, to maximize our position, we can create a limit order here at these nodes. So let's say our maximum position size is 2 contracts. Simply put, we would have entered a market order of 1 contract, and our limit order would also be 1 contract. Therefore, our max volume to close is 2 contracts here, should the trade go against our original idea. Now, if price comes back and then goes to our target, great, we reached full position size. If it doesn't come back, we still make a profit. But if we are stopped out, we have a smaller loss than we would have done if we had just marketed in at our full position size. Plus, by not going in our full position size, we can manage our position better. Maybe circumstances have changed and we don't want to add to the position anymore. So if we decide to close early, our loss from that position is still smaller and managed better. Now, before we go any further, I want to make this very clear. I am not telling you that every time you see this at a high or low that you should take a trade. I'm showing you how you can read the footprint at highs and lows or at support and resistance levels. So make sure you have a reason to be taking a position. Use this in addition to your trade idea. Although you can use this as a setup, be careful just trying to pick tops and bottoms. Now I will show you a few examples and I want you to identify which of the 4 criteria that you can see. Okay, so here is example 1. Example 2. And example 3. If you want to go back and pause, then please feel free, but we will now look at the examples together. So example 1. First, let's address these 2 candles here, as I'm sure someone will have still ignored what I said earlier about not just trading whenever you see a new high formed. True, they are both making a new high of day, have a finished auction as well, but quickly taking a look at them, look at the increase in delta on this first candle. I'm not going to stand in the way of that. Granted, on this second candle, it is possible losses were realized if you did take it short, but upon seeing this candle here, which is the focus of this example, why would we have been far more confident in a short trade? Well, we have a zero auction, volume tapering, and an imbalance near the high. Okay, so now is there anything else? Well, certainly you cannot miss this. Look at the large blue delta nodes. This is showing us that buyers were very aggressive here, and yet we have still closed below these levels. Also, note what volume profile shape we have, which is not in the previous 2 candles. So in unifying these elements, we have an ideal trade setup here. The second example is actually great. It's one of my favorite lows to see actually. What we have at the low is a stacked imbalance. This is referred to sometimes as an imbalance reversal, and if you want to know more about them, then you're in luck because they are going to be the subject of next week's video. But for now, let's check this low out. Zero auction at the low. Yes, several in fact. Volume tapering. Well, not strictly, but it doesn't matter so much when there is an imbalance right at the high or low in this case. Our next point, do we have an imbalance in the bottom 3 ticks? Well, again, it's kind of irrelevant as we have a stacked imbalance. But note, this stacked imbalance is a sell side imbalance, not a buy side. Again, don't worry about the details of this so much right now, as it will be covered next week. Finally, our delta nodes and profile. Delta nodes are present but less weighted due to the stacked imbalance, so would we take trades away from this low? Certainly. If you didn't mark it in upon seeing this form and reject, your natural entries would be placed at these levels, and of course the stop would be placed here. The third example, we have a finished auction, but in opposition to my previous advice of the lower the better for the bid or ask volume, this is actually extremely high. But let's do our standard checks. Finished auction, check. Volume tapering, no. Inverse to that, the volume at the low is actually the highest and is the point of control at the very low. Do we have an imbalance? Check, but it is not a buy-side imbalance again, like we would standardly look for. But given the size of this imbalance, it certainly gains our attention. As for delta, well, the only large node is also at the low, which shouldn't be surprising if you remember how we get a delta reading in the first place. Now, what we have here is stopping volume. So do we like this low? Absolutely. And we could have taken a very low risk trade here. Now, granted, you would have had to be very fast to get an entry down here. But here or here is also pretty reasonable. And our stop, of course, below this low, as we can be confident that this is our low for now. Maybe not all day, but I'm scalping, so I don't care if it gives me 5 ticks or my runner gets taken out at 50 ticks. It's about identifying strong points in the market and then creating a trade idea that fits by reading and following the order flow. By combining the elements I've shown you in this video, you should be able to make more informed trade decisions, but always ensure you have a solid trade idea and don't rely solely on these indicators to pick tops and bottoms. But certainly, you will start noticing these criteria the more you watch a footprint chart. Thank you for watching this episode of White Swan Finance. If you found this video helpful, please like and subscribe for more content on Mastering Order Flow. Don't forget to check the description for a free trial link to ATAS, and stay tuned for the next episode where we will delve deeper into stacked imbalances and I will give you some setups that you can use. See you next time. Bye for now.